In 1789, with the first Coinage Act, the Constitution ratified, gold was $20 an ounce. And when they created the Federal Reserve in 1913, it was still $20 an ounce. We had no inflation during that time period. In fact, we had falling prices for well over 100 years. We had the Industrial Revolution. We absorbed millions and millions of immigrants into this country under a gold standard. And, we built the strongest economy in the history of the world with a gold standard. So to say that the gold standard didn't work is pure nonsense. I mean, it's worked better than anything we've tried since. You say how high can gold go? I mean, there's no ceiling on gold because there's no floor on the dollar. Since we established the Federal Reserve, the price of gold has gone from $20 to $2,700, almost $2,800 was the high. If you just assume a similar move from here, that takes gold to over $360,000 an ounce. So how long will it take to get there? It just depends on how much quicker we debase the currency. But I think the rate of currency debasement has accelerated dramatically. When this millennia started in 2001, gold was still under 300, and here we are, 20 years into it, 23 years, 24 years into it, and we're 2,700. Gold's rise, I think, is accelerating, and I think it's going to continue to accelerate. But ultimately, I do think that we return to a gold standard because that's the only standard that works. And I think that if the dollar fails, which ultimately it will, I don't see how you just replace it with another fiat currency. I mean, I can see how, you have some of these smaller countries and their fiat currencies collapse and they get wiped out and they dollarize or they peg a new currency to the dollar. Okay, because, we still have some, fiats that are working. But if the king of fiat, if the primary reserve currency collapses, we have runaway inflation, then what do? You tell people, well, just take the euro, it's better, take the yen. I mean, none of these currencies, are viable as, so the only thing that makes sense is real money. And so ultimately, that's where we're going to go. We're going to head back to that. I just don't know exactly the timetable or the path that we get there, but I'm pretty sure that's where we end up. You have as a hammer, everything looks like a nail, right? So all Michael Saylor wants to do is get the price of Bitcoin higher. And so, yes, if the U.S. government were to be dumb enough to sell all of its and buy Bitcoin, the price of Bitcoin would go up. I mean, at least while the government was buying. Once it was finished buying, it would come crashing back down. But yeah, I agree. Bitcoin is eating gold's lunch in the PR department. It dominates the media coverage. You probably have 10, 20 times, maybe more coverage of Bitcoin than you do of gold.
Yeah.
You have, the Bitcoin, they just had their big convention in Nashville. Over 20,000 people spoke or attended the conference. Major speakers. Adrian and I just got back from the New Orleans conference, the longest running gold conference in the U.S., maybe 500 attendees. It's tiny compared to the international interest in Bitcoin. People are making a tremendous amount of money on paper in Bitcoin. Other people are realizing these gains by selling into mania.
In 1789, with the first Coinage Act, the United States formally adopted gold and silver as the foundation of its monetary system. Back then, gold was priced at $20 per ounce. Remarkably, by the time the Federal Reserve was established in 1913, gold was still $20 per ounce. Over 124 years, the U.S. economy thrived, experiencing no significant inflation. In fact, prices fell consistently during this period. This deflationary trend didn't hinder progress, quite the opposite. The Industrial Revolution unfolded, millions of immigrants were absorbed into the workforce, and the nation emerged as the strongest economy in the world. All of this occurred under the stable financial footing of a gold standard. To dismiss the gold standard as ineffective is to ignore this historical success. Gold-backed currency provided economic stability and a safeguard against reckless monetary expansion. Contrast that with the post-Federal Reserve era, where the purchasing power of the dollar has steadily declined. Gold's price trajectory reflects this debasement. Since 1913, gold has risen from $20 per ounce to nearly $2,700 today, illustrating the dollar's dramatic loss of purchasing power. Looking at the future, it's worth contemplating how high gold could go. There's no ceiling for gold because there's no floor for fiat currencies. Historically, when fiat currencies collapse, gold becomes the ultimate safe haven. If we consider the dollar's trajectory since the Federal Reserve's inception, the price of gold has risen 135-fold. Applying a similar multiplier to today's price could project gold at well over $360,000 per ounce. While this may seem extreme, it's a logical extrapolation of continued currency debasement. This debasement has accelerated significantly in recent decades. At the start of the millennium, gold was under $300 per ounce. In just over 2 decades, it has surged to nearly $2,700. The pace of gold's rise is quickening, reflecting the rapid expansion of money supply and the erosion of trust in fiat currencies. Ultimately, the only sustainable monetary system is one rooted in real assets like gold. Fiat currencies, untethered from tangible value, inevitably fail. When the dollar collapses, as all fiat currencies eventually do, what replaces it? Another fiat currency like the euro or yen. That's unlikely, given their own vulnerabilities. The logical alternative is a return to gold-backed money. History supports this. Gold has been a reliable store of value for thousands of years, maintaining purchasing power through wars, economic upheavals, and the collapse of empires. Consider the growing global skepticism of fiat currencies. Countries like China and Russia are accumulating gold at unprecedented rates. Central banks worldwide are diversifying their reserves away from dollars. This trend underscores the waning confidence in the US dollar's hegemony. If the king of fiat currencies falters, gold will likely assume its role as the ultimate reserve asset. Now let's address the media narrative. Bitcoin has dominated headlines, often overshadowing gold. Bitcoin enthusiasts like Michael Saylor argue that governments should sell their gold reserves to buy Bitcoin. While such a move would undoubtedly spike Bitcoin's price in the short term, it's not a sustainable strategy. Unlike Bitcoin, gold has a proven track record as a store of value. Its physical properties, durability, divisibility, and universal acceptance, make it unparalleled as a monetary asset. Bitcoin's popularity is undeniable. Conferences draw tens of thousands of attendees, and the digital asset enjoys robust media coverage. In contrast, gold conferences attract much smaller crowds, reflecting a lack of mainstream interest. This disparity doesn't diminish gold's importance. If anything, it highlights an opportunity for discerning investors. While Bitcoin captures speculative capital, gold remains the cornerstone of financial stability. The rise of Bitcoin ETFs has diverted some investor interest away from gold. Retail investors, drawn by Bitcoin's meteoric gains, have sold gold ETFs to fund cryptocurrency purchases. Despite this, gold has performed exceptionally well, thanks to robust central bank demand. Central banks understand the strategic value of gold as a hedge against currency risk. Their buying has offset retail outflows, stabilizing gold prices even as investor sentiment fluctuates. It's important to note that silver's volatility is both a risk and a reward. While it offers greater upside potential, it also experiences sharper price swings. Investors must be prepared for this volatility and adopt a long-term perspective. The rewards, however, can be substantial. During previous bull markets, silver's gains have far outpaced gold's, delivering extraordinary returns to patient investors.
And I do think that there are some people who are buying Bitcoin instead of gold. I think most people who are buying Bitcoin wouldn't have bought gold. I think they're buying Bitcoin instead of some other meme stock or other speculative assets. So I think that the money that's going out of gold into Bitcoin isn't as substantial, although I think that's changed a bit this year ever since the ETFs were launched. I think the ETF buyers, I think more of those guys took their money out of gold stocks and gold ETFs than the typical hodler who has self-custody of his own coin, right? But I think some of the investor money was diverted, and I think that's why we had the big outflows from the gold ETFs, and we had the weakness in the gold stocks. I think that was investors moving money out of gold in Bitcoin. That didn't have much effect on gold. Gold had a huge year anyway, and that's because foreign central banks were buying whatever retail investors were selling. Now, it's hard to say, how much higher gold would have been without that selling, or if the retail investor would have been buying in competition with the central banks. We will never know. But I think on the margin, sure, it's taken some of the wind out of gold's sail. But I don't expect that to continue. At some point, the Bitcoin bubble is going to pop for good. And as the air comes out, I think, that'll be a positive for gold.
Yep.
problem that silver's had is the central banks aren't buying it. It's not the type of metal that they want to store. It's the people gold, right? Poor man's gold. And so since the public isn't buying gold or silver, and the central banks are buying gold, that kind of leaves silver, without a lot of buying interest. And so I think that's why it's cheap. That's also a good opportunity, because when the public returns to the silver market, the prices are going to go much higher. And so, and if you look back historically, there's never really been a bull market in gold that silver hasn't, done better. Now, that it's been a while since that's been true. Silver outperformed gold in the big run up till 2011, when it got up to $50, and now it's at $30, and gold's at $2,700. So silver is very cheap in terms of gold, and over time you would expect it to be a lot less cheap. Whether it gets expensive again, we'll see. I mean, it's possible that silver can get to the point where it's expensive with gold, but you'll make a lot of money if it just reverts to the mean. It doesn't have to become expensive, just kind of fairly valued based on the historic relationships between the metals that go back for a long ways. I mean, this is just not new data. You can go back a long time. Look at gold versus silver.
In recent years, the rise of Bitcoin has captured headlines and diverted attention from gold. Michael Saylor's calls for governments to sell gold reserves to buy Bitcoin might sound innovative, but they reveal a fundamental misunderstanding of sound money principles. Bitcoin may dominate the public relations landscape, but its volatility and speculative nature make it an unreliable store of value compared to gold. Let's address the elephant in the room. Bitcoin's astronomical price movements have overshadowed gold in the media. Bitcoin conferences attract tens of thousands, while long-standing gold events barely fill smaller venues. The mania surrounding Bitcoin has fueled its speculative rise, but it's also created a bubble that is bound to pop. Bitcoin's volatility is its Achilles heel. Unlike gold, which has been a reliable store of value for millennia, Bitcoin's price swings are driven by speculative fervor rather than intrinsic value. For every hodler claiming Bitcoin is the future, there are others cashing out massive gains, leaving latecomers holding the bag. When the dust settles, gold's role as the ultimate safe haven asset will become even more apparent. Bitcoin's public relations machine is undoubtedly impressive. It dominates the media landscape, garners more social media mentions, and even has its hype conferences. Yet for all the noise, Bitcoin lacks the stability, history, and universal trust that gold offers. Investors should remember that popularity doesn't equal substance. As the bubble deflates, those who relied on Bitcoin as a store of value may find themselves questioning their decisions. Despite Bitcoin's media dominance, the real money is flowing into gold. Central banks worldwide are not buying Bitcoin. They're buying gold. In 2023, central bank gold purchases reached historic highs. Why? Because gold offers something Bitcoin cannot: stability, liquidity, and universal acceptance. Foreign central banks, particularly those in emerging markets, are divesting from U.S. treasuries and increasing their gold reserves. This shift reflects a growing distrust in fiat currencies, particularly the dollar. If retail investors join central banks in this gold buying spree, the price of gold would soar even higher. This trend among central banks underscores a fundamental truth: gold is real money. Unlike Bitcoin, it is not subject to technological vulnerabilities or the whims of speculative markets. Gold's appeal lies in its timelessness and universality. It's a currency that transcends borders and politics, making it an ideal reserve asset in uncertain times. While gold garners most of the attention, silver remains an undervalued gem. Historically referred to as poor man's gold, silver has immense potential for outsized gains. In the last major bull market, silver outperformed gold, reaching a peak of $50 an ounce in 2011. Today, silver trades at around $30, making it incredibly cheap relative to gold. The gold-to-silver ratio, currently around 85:1, highlights this imbalance. Historically, this ratio has been much lower, often reverting to 15:1 during periods of economic instability. If silver merely returns to its historical mean, investors could see substantial returns. Silver's dual role as both a precious and industrial metal adds to its appeal. As global demand for electronics, solar panels, and other technologies grows, the industrial use of silver continues to rise. This creates a unique dynamic where silver's price is supported by both safe haven demand and industrial consumption. Unlike gold, silver isn't a preferred asset for central banks. Its bulkier nature and industrial uses make it less practical for reserve holdings. However, this lack of central bank interest creates an opportunity for individual investors. When the public returns to silver, as it inevitably will during a bull market, prices could skyrocket. For those looking to diversify their portfolios, silver offers a unique proposition. It's affordable, widely available, and historically tied to gold's performance. While central banks focus on gold, individual investors can capitalize on silver's potential for outsized gains. Throughout history, gold and silver have moved in tandem during bull markets. While gold sets the stage as the primary safe haven asset, silver often steals the show with its explosive price movements. Investors who recognize this pattern can capitalize on silver's potential to outperform gold. The relationship between gold and silver isn't just historical, it's deeply rooted in their physical and economic properties. Gold is rarer, more stable, and less volatile, making it the go-to asset during times of uncertainty. Silver, on the other hand, is more abundant and versatile, giving it a unique role in both investment and industrial markets. The future of gold and silver isn't just a story of price appreciation, it's a story of survival. As fiat currencies continue their downward spiral, precious metals will become indispensable for preserving wealth. Here's what investors need to consider. Focus on physical metals. ETFs and other paper assets may offer convenience, but they lack the security of physical ownership. Coins and bars are tangible assets that don't rely on third-party promises. Diversify with silver. While gold is essential, silver offers unique opportunities for growth. Its affordability makes it accessible, and its industrial demand provides additional support for price appreciation. Watch central bank actions. Follow the money. Central banks are signaling their distrust of fiat currencies by increasing their gold reserves. This trend will continue to drive gold prices higher. Stay patient. Precious metals bull markets are marathon events, not sprints. The key is to accumulate steadily and hold for the long term. Understand the global context. Geopolitical tensions, inflation, and shifting economic policies all point to a challenging future for fiat currencies. Gold and silver are your best defense against these uncertainties. Inflation is often misunderstood as rising prices when, in reality, it's a reflection of the declining purchasing power of money. Gold has always been the ultimate hedge against this decline. Over the past century, while fiat currencies have lost their value, gold has retained its purchasing power. This isn't just theory, it's a proven fact. As central banks continue to print money to address economic challenges, the inflationary pressures will only intensify. This creates a perfect storm for gold and silver. Investors who act now can protect their wealth and even profit from the inevitable rise in precious metal prices. Bitcoin's proponents argue that it's the digital gold of the 21st century. While this narrative has gained traction, it's important to separate hype from reality. Bitcoin's volatility, dependence on technology, and lack of intrinsic value make it a risky proposition compared to gold. Moreover, Bitcoin's environmental impact and regulatory uncertainties further complicate its long-term viability. Unlike gold, which has proven its worth over thousands of years, Bitcoin is still in its infancy. While it may have a role in the financial ecosystem, it's unlikely to replace gold as the ultimate store of value. Gold and silver have outlasted every fiat currency in history. They've weathered wars, economic collapses, and technological revolutions. While the world becomes enamored with speculative assets like Bitcoin, the fundamentals of gold and silver remain unshaken. Investors today face a choice: chase fleeting gains in volatile markets, or secure their wealth with assets that have stood the test of time. The answer is clear. As central banks lead the way, individuals must follow their example. The future is uncertain, but one thing is guaranteed. In a world of fiat illusions, gold and silver are the ultimate realities. Don't wait for the storm to make your move. Prepare now. Accumulate gold and silver, and ensure your financial stability for the years to come.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.